Hey traders, David Frost, and I'm here with a review of today's S&P E-mini futures contract. I trade this contract, I trade the S&P 500 E-mini futures contract each and every day, and therefore I do a lot of work on it, I do a lot of analysis, I do my own support and resistance levels, and as such, I actually offer those support and resistance levels to other traders that want them. So what I'm going to do is review the charts a little bit, and I'm also going to go over some of the nuances that happen throughout the day that give tip-offs of other things that are about to occur. So for example, we opened the market today, the market opened here at 940. This is the 940 candle, so between 930 and 940, the opening price was 24.7425. Let me bring up the actual support and resistance first. So this is the service I have, Lazy E-mini Trader, similar to the Lazy Gap Trader, just different. And what happens is, and you can see here that it goes out right before the opening bell, 9:22 a.m., so just a few minutes before the opening bell at 9:30. So I give simple thing, support and resistance levels. On the resistance side, all the way up, I had 24.91, 24.86, 24.81, 79, 75, and support, I had 24.71, 65, 61, and 57. Okay, so let's take a look at what happened. Those are the same numbers that you see the lines running across the screen horizontally. So you can see what happened. The market opened below the first level, which was 24.75. We hit it in the first candle and backed off immediately, okay? And then just about 20 minutes later, we got above that level. And once we get above one level, we look to the second level. The market will stair-step its way higher over time, whether it's intraday or even day-to-day. So once the market gets above and confirms above a certain level, and confirmation is something I talk about in my trading course and how when I educate traders. But what happens is the market will go towards the second level, and the second level was 24.79. We hit it. We backed off in the same candle, but the next candle opened right on it and took off higher. Did not pay attention to the next level, which was 24.81. That happens sometimes. The levels aren't going to work out 100% of the time, and these levels are not meant to be spot on to the penny. Market reverses or market takes off from a specific level. These are levels where there has to be a few ticks, even to a few points sometimes, of leeway. But what these levels are, and I'll put them up against anybody's levels out there, these price levels are support and resistance from an intraday perspective. They are institutional support and resistance levels, bar none. You see what happened? The market was making a pretty good run for the upper level. Even I thought we might even get to the 24.91 today. We did come up short. You can see we pierced through the 24.86 by a couple of points, but you can see what happened after that. That was the top level of the day. We backed off, and look what happened when we did come back down to the 24.81. At least on a temporary basis, that level did provide some support for a quick scalp trade if a trader was willing to scalp that level. Another thing I talk about in my education material is the time of day is extremely important. And when a shorting opportunity exists in the market and when it doesn't exist in the market, it's very important for traders to understand when the prime selling times are and the prime buying times are. It's very important. Nothing works 100% of the time, but if traders understand when the good shorting opportunities are and when the good long opportunities are, they're going to be better off in the long run. So look what happened when we came back into the 24.79. We did what's called market consolidation, and I'll just highlight it here. This market consolidated for about an hour, give or take. And the market consolidates for about an hour. What it's doing is it's building energy for another move, in this case, lower. And again, what I teach my traders is how to identify specific price patterns, specific chart patterns that will give a tip-off to what the next likely thing that's going to happen is in the market. And anybody that's taken any of my courses or material or understands my material understands that that chart consolidation was telling us in no uncertain terms the market was headed lower. Now, when we got back to the 24.75 level, you can see we came up short and spent about 20 minutes consolidating above that level. What that does is it lessens the importance of the 24.75 because essentially we came up short and bounced. Try it again, came up short and bounced. And when that happens, and I'll even take it down to a 5-minute chart so we can see it just a little bit more clear. We consolidated over the 2475 level right here. This is the area that I'm talking about. And the longer we consolidate over a level, the less important that support level in this case will become. And the same thing works on the flip side. If we consolidate under a resistance level, the less important that resistance level will become. But look what happened when we came back in to the 2471 level. We hit it, made a low of 2470.50, and we bounced up, closing that candle at 2472.75. Not a tremendous trade, but the market was selling pretty good at the time. Any way you want to slice it, that was a scalp trade that was tradable. The market did continue lower, but at the end of the day did bounce higher, and the 2471 level did become, at the end of the day, supportive of the market. We did not get a tremendous bounce, but the market was selling hard for the second half of the day, and therefore you want to be careful on the long side. Always, the trend is your friend. And if the market is in sell mode, what we want to do is look for bounces to sell into. And if the market's in rally mode, we want to look for pullbacks to buy for a further rally. These are all the things that I discuss and teach in my courses. Anyway, folks, thanks for tuning in. There's your daily S&P 500 E-mini futures update for the day. Today was August 8th, 2017. I'm David Frost. Thanks for tuning in.